Now let's get you what are the stocks being discussed in the dealing rooms and one should keep an eye on. Maruti Suzuki is one stock which we understand a lot of funds have started nibbling in, especially after the stock made a bottom around 1280 or so. The stock has recovered very sharply around 27 rupees. March sales numbers were much ahead of what the street was estimating at 1.2 lakh units. So it was a very strong side of March sales numbers. There's also been a market share gain of 4.5% as far as the company is concerned, despite a competitive scenario, despite a lot of new launches from competition and inventories remaining high. The company has maintained a high market share and even gained it. So that is one stock one needs to keep an eye on, according to institutional dealers.
Well, not just Maruti Suzuki, but United Spirits as well. And dealers, in fact, are expecting quite a bit of traction in this stock on the upside. So currently, the stock is at close to 1859 levels, and they're expecting it to touch levels of close to 1900 to 1925. Remember, we do know that Diageo's open offer will be between the 10th and the 26th of this month. And JM Financial, that's going to be the lead banker for the open offer. Remember, Diageo plans to buy a 26% stake at a price of 1440 rupees per share. Well, Dipan, moving it across to you with respect to the auto sales numbers, that came in as a bit of a disappointment barring Maruti Suzuki. What did you make of this?
Yeah, I think that, Maruti came out with very decent set of numbers and the market share gain is indeed quite noteworthy. At the same time, I think the company continues to deliver as far as new models are concerned, and clearly I think, for investors wanting to ride the auto sector, it perhaps is the best pick. But also what comes to mind is M&M, and that company also did quite well as far as their sales are concerned for the month of March and for the whole year. So I would say that, for the auto industry, I think Maruti and M&M would be the two best picks. And one could, if one anticipates interest rates to drift lower for the current fiscal, then auto industry could see a turnaround and the sentiment could improve from this point on. And I would say the outperformers within the sector would remain as Maruti and Mahindra & Mahindra, given the kind of progress they have made in rather tough times. So despite a slightly premium valuation, we would go with these two stocks.
Right. Mid-cap indices were flying around much more than the benchmarks today. Sunil, you track mid-cap space with a magnifying glass. In the past, you have not shied away from taking some big bets in that area. What do you make of this year's selling in the mid-cap, which happened about around 1.5 to 2 months back? Do you think it was overdone? And now is opportunity which is being presented in the mid-cap space?
I think we need now a bigger magnifying glass because the mid-caps have become small caps and small caps have become micro caps. But having said that, there is definitely one category of small and mid-caps which are companies run by very good entrepreneurs, a lot of potential. And, frankly, we believe that there is an opportunity which is lying there. Now, whether we buy today or wait for 2, 3, 4 months is a call which we will take from stock to stock. But we are getting into a stage where some of these stocks can really turn out to be great alpha creators. And, our attempt over the next few months would be to definitely add a lot of these, by replacing some of the larger companies which probably are trading now at their fair valuations.
Sunil, we'll come back to you with some individual stocks there. But Dipan, do you agree with the same, that now the mid-cap space presents an opportunity, or would you stay away from this given the massive volatility that one sees? And what would be your individual stock ideas from this arena?
So I think this is a good time to focus on industries and verticals rather than look at large cap and mid cap or small cap for that matter. And clearly the preference has to be for the interest rate sensitives on one side, and there the best pick would be the private sector banks. And then considering the kind of current account deficit which is there, clearly rupee seems to be on a very sticky wicket. So look at the exporters, pharmaceutical companies, IT companies. And over there one could easily pick the companies which are delivering performance which is better than the industry averages. Because obviously, all these three sectors are also in a challenging mode, but still companies are thriving over there. So the preference has to be for those outperformers. And within these three sectors and a few consumer-oriented FMCG stocks, investor can easily create a portfolio of blue chip shares, which could deliver very good returns over the long term. So that would be the advice going forward. And stock specific, I think, we know the leaders which are there in the sector and the companies which have really outperformed.